We did an Illinois tax update webinar last week. We had several questions, so we thought we would put together a little video to answer those questions. So I welcome any feedback or additional questions you may have as we go through this. We're going to do it by section. So the first section we're covering is Empower Illinois and the questions that came up. That is the program where taxpayers can contribute to the education for kids and get a 75% credit on their Illinois tax return. So the first question was, are there any income limits for the Empower Illinois credit? There is no income limit. However, the maximum credit you can get is $1 million, which means you would have a maximum contribution of $1.33 million. The next question was, are Empower Illinois credits available on business returns? And yes, they are. They're available on both individual and business tax returns. The next question was really a clarification. It says you can't take the charitable donation on the federal, but you can on the Empower Illinois. And yes, that is correct. But remember, it's a much better deal as long as you have enough Illinois tax liability to use it up, because you get 75% credit. You can carry that credit forward if you can't use it all in 1 year. The question was, where do you report the Empower Illinois donation on the tax return? You have to get the certificate from My Tax Illinois. After you make the donation, they send you a certificate number, and that all that information goes on Form 1299C of the IL 1040, IL 1120, 1120S, or 1065. The next question was, am I wrong in that I believe the state will determine which school actually gets the donation? I can choose a Quincy school, but the state will send to Chicago. Boy, I am not sure that you can track away that your donation made it to that school. The school may be able to track that for you. So I'm not really sure, but we are told that you get to choose your school, and that's where the donation should go. The next section of questions has to do with the SRECs, which are the state renewable energy credits, equivalent to the federal energy credit, solar credits. The first question was, is excess energy produced by solar panels considered federal taxable income? Other sources say that SRECs are the sale of property rights, so it seems like it would be taxable. This answer varies by state, but in the state of Illinois, we are under the net metering rules here in Illinois, where you receive 1 kilowatt of electricity for every kilowatt of excess electricity that you put out on the grid. If you receive monies in excess of your electrical usage that you take from the grid, then that appears that portion would be taxable. If you only receive credit back so that you can heat or cool your home with those kilowatt hours, then it appears that it would not be taxable and you're just being reimbursed. However, businesses would be taxable because businesses have written off the cost of their energy. So any money they get back from a utility company would be taxable for the business. The next question was, where could I find more info on SRECs? I have the website up here on the screen for you. You're welcome to go to that website and find additional information. An attendee wrote, last year we had a client who installed solar on his home, had no business use, and the company issued him a 1099 miscellaneous. How should this have been reported on 1040? According to my interpretation of those credits coming from the state being classified as a reimbursement of the cost of you installing solar, in my office, we would have reported it as other income on the 1040, and then we would have shown a negative amount showing return of basis, and thereby netting it out to zero being taxable. Another question regarding SRECs is, what is the source for saying SRECs are not taxable if non-business use? Generally, all income is taxable at the federal level. Again, I don't have an exact source. I checked with a couple of people whose opinion I respect on this regard, and they all said it's the logic that all that vendor is doing is reimbursing you for the portion of the cost that you paid to have the solar installed. And because it's not business, you never deducted that to begin with. So it is just truly logic at this point. I do not have a source one way or the other. Is Illinois solar credit available in 22 and 23? What about previous year purchases, for example, 2020 or 2021? The bill allowing this credit was signed into law on 9/15/21. It was called the Climate and Equitable Jobs Act. So all that I could see was it was effective for 22 and 23. I could not find anything that said it was available prior to 22. The next section of credits deals with the electric vehicle credit. And it asks, is the electric vehicle credit available to businesses as well as individuals in Illinois? And the answer to that is only individuals. Also, as I was doing some research for these questions, I came across this notice that came out January 11th that this $4,000 Illinois electric vehicle credit has run out of money. So now they're going to portion out these rebates based upon low-income applicants who apply for this credit. And again, the deadline for this section of it is January 31st, 2023. And as funds become available, then they may open up a third cycle to get this credit. So I would be very cautious about advising clients that you have an electric vehicle credit here in Illinois, just because as of right now, they've run out of money and you have to qualify. I did not look into the details of that, but I would say as tax preparers, you might be a little cautious in advising that we have an Illinois electric vehicle credit. Someone wanted to know if the dealer was going to apply for that credit for the client, and that I absolutely do not know. I'm not a car dealer, so I'm not sure how that procedure would go about. I know there's a form you file, just not sure who would be responsible or who you might ask to file that. Is there an income limitation on the Illinois electric vehicle rebate? And the answer is no. However, remind you of the slide I just showed you that right now they've run out of money, so only low-income people will be granted that. So it may be a very questionable situation as to whether a high-earning taxpayer would qualify for the credit. Is there an Illinois credit for electric vehicle charging stations that are installed in the home? And I could not find anything about charging stations and getting a credit in Illinois. So my answer to that would be no at this point. This has to do with the employee retention credit. We had several questions on this. It says, since the Illinois base income does not change, do we still need to amend to show the change in federal income and the corresponding subtraction? So in my presentation, I had said you have to reduce your federal taxable income by the amount of the employee retention credit the taxpayer receives. So, but when you get to the Illinois on line 16, Schedule M, you get to take that back off, thereby reducing your income and making it equal to what it was prior to you reducing it for the ERC. And the answer is yes, you still have to amend. And the reason is federal and Illinois share information back and forth. When Illinois sees that you have an increase in your federal AGI, they're going to send you a bill and want you to pay Illinois tax. So yes, you do have to file the amended Illinois return, even though the net result is zero additional tax. Although, hold on for a moment, because I'm going to have something where it actually is going to show you have a refund coming from Illinois. Clarify when the deadline is for applying for employee retention credit. You have 3 years from the due date of the return or 2 years after the tax is assessed, whichever is later. So, for example, the first time you could have applied for and received employee retention credit was the second quarter of 2020. Therefore, the final date for filing an amended second quarter 2020 would be July 31st, 2023, 3 years from the due date of that second quarter return. At the other end of the spectrum, the last quarter in which you could have applied for ERC due to COVID was the third quarter of 2021. So you would have until October 31st, 2024 to apply and amend that 941. Someone asked, does line 16 on Schedule M for ERC also apply to the tip credit that you claim on federal returns for businesses that have tipped employees, and the employer is taking the tip credit for the employer share of FICA? And the answer is yes. That line is used for any federal credit that affected federal but had no bearing at all on Illinois taxable income. So the answer is yes. Here's the little caveat, and I give kudos to whoever asked this because I had not actually done any ERC amendments for 1040 filers. But if you go back and amend to Schedule C for employee retention credit, that means you are increasing the Schedule C income, which in turn then increases your self-employment tax. Well, because you get an adjustment to the front page of your tax return for half of the SE tax, that actually then would decrease, or I should say increase that deduction for SE tax. So when you go to the Illinois, you have a lower AGI, and then when you add back in the ERC credit adjustment, you'll end up with a net lower taxable income to Illinois, and you will end up with a little bit of an Illinois credit. It asks, does ERC apply to all types of tax returns? And I assume you meant income tax returns. So the answer is yes. It is a credit that is generated for wages paid during a qualifying period for a qualifying reason. The reduction of your wage expense can apply to any type of income tax return, an individual, a partnership, an S Corp, a C Corp, trust, nonprofits, any place where you would have taken a deduction for wages, that ERC does apply. Someone asked, what are you hearing regarding amending federal income tax returns for the employee retention credit? Are there then interest and penalties applied by IRS? Well, in April of this past year, IRS released this notice, and you can Google it and read it for your pleasure if you want. They state in there that if you can show reasonable cause, or you could even possibly use first-time abatement that you in the last 3 years have been current on all your taxes, that they in all likelihood would abate the penalty. I'm not sure about the interest part, but it certainly would be worth a try in writing. I have not seen any. We were fortunate in my office. We were aware of this when we filed 2020 tax returns, and we had computed what those refunds were going to be and had booked them in the current year. So I've not seen what's happening in real life on those. Maybe somebody out there would like to share that on Facebook or another social media and let us know what you're seeing on that front. Regarding the pass-through entity, if 2022 pass-through estimates were not made, can the election be made on the 22 returns? And if so, will penalties be assessed? Yes, the election to do the pass-through entity tax is a year-by-year election. you make the election on the tax return when you file it, which of course is in arrears. So you actually have to decide whether you're going to do that or not so that you can make estimates to stay current. If you don't make the estimates, and then here in 2023, you decide you want to elect pass-through entity, then you will be subjected to the underpayment penalty because you were required to make estimates during the 2022 year. It said for the pass-through entity Illinois penalty, can you use the prior year tax as a safe harbor? So I looked this up, and this explanation came right out of the instructions for the Illinois penalty 2220. And it says that generally a taxpayer is subject to the penalty if they did not timely file at least the smaller of the tax shown on the current year return or the tax shown on the 21 return if you filed a 21 return and you had at least some tax on it. So what I'm afraid is going to happen is if you did not elect PTE in 2021, they're not going to let you use that exception for prior year tax on the 22 return because you didn't show any pass-through entity tax. That is truly a guesstimate on my part on how that's going to work. But I would tell the client, be prepared, you may be subjected to penalty because based upon their explanation of when you pay a penalty or when you don't, I'm thinking if you showed no PTE in 21, you're not going to be able to use that as an exception to the penalty in 22. Can an overpayment of pass-through entity tax be applied to the next year? And the answer is yes. You can take it as a carryover, or you can ask for it to be refunded. Works just like an overpayment on any other kind of tax return. Someone said, can you clarify, the deduction occurs in the year the entity actually paid the tax, regardless of basis of accounting. If there is an accrual basis taxpayer, wouldn't they get the fourth quarter payment made in January of the following year, similar to the payroll tax or replacement tax? And it's a very good question because I said the same thing when it first came out. However, this is IRS's interpretation of that. A pass-through entity tax liability is generally not deductible by an accrual basis pass-through entity until the tax year in which the pass-through entity tax liability is considered fixed and economic performance has occurred. So what they're saying in this explanation is you don't actually elect PTE until 2023 for the 2022 return. You may be making estimates, but you have not actually elected the tax. So that's why the accrual basis rules don't work, is because you have not made it a fixed and economic performance has occurred because you've sent in estimates, but the liability is not fixed until that following year. So that is their explanation of why you cannot do it on an accrual basis taxpayer. The next question has to do with that as well. Don't you have to pay before December 31st to deduct PTE on the federal return? And that is the correct statement if you're trying to deduct it on the current year's tax return. However, any PTE you may pay at the time of filing, for example, here in March of 23, you won't be able to deduct it on the 2022 return. However, it would be a deduction on the 2023 return. You just have to wait a year to see the benefit of that on the federal return. If pass-through entity election wants to be elected for 2023 and you pay estimates during 2023, do you base it on the combined PTE and replacement tax? And I believe I had a slide on this during my presentation. So here's the ruling on that. If the election to pay the pass-through entity tax are based on the sum of both the tax and the replacement tax. However, if you elect not to pay PTE, then you do not have to pay estimates on replacement tax. So if you elect PTE on the 22 return in March of 23 when you're filing it, then they're going to have based your estimates on the combined PTE and replacement tax. If you don't make that election to pay PTE, then there's no penalty for just paying replacement tax at the time you file the tax return. When is an individual's pass-through entity payment that comes through on the K-1 deemed to have been received? So this works the very same way that withholding on W-2s, 1099-Rs, any type of pass-through withholding like that, they are considered to have been made equally throughout the year, no matter when the entity actually withheld or paid those payments. So if you elect PTE in March of 2023 and you had paid no estimates, you're going to pay it all at the time you file the 2022 return. That pass-through credit goes on the 22 ILK1P, and you as the individual receiving it get to enter that as estimated taxes as if they had been timely made as estimates during the prior year. So I hope that clarifies on how you enter that on the tax on the individual return. When you have an investment partnership making a pass-through entity payment in Illinois, what is the deduction claimed on the federal return? Or excuse me, where is the deduction claimed? Page 1, trade or business as per Revenue Ruling 2020-75, or is it a separately stated deduction on Schedule K? Now, again, this is my interpretation, but it goes in line with that Revenue Ruling 2020-75, that this PTE is a business tax and therefore goes on page 1. And the reason that would be beneficial for the taxpayer is there's no limitations to that. There are no limitations that are made when it comes to pass through other than basis, of course, or active or material participation. However, if you put it as a separately stated item on Schedule K, then the investment expense rules come into play. And as you all know, you can't have investment expenses that exceed investment income. So again, I'm just sharing with you what my interpretation is, but that goes hand in hand with the 2020-75 rules. It appears that Illinois allows you to make the pass-through entity election on an amended return. Do you agree? And yes, I agree with that. On the IL 1065X, there is a box G in step 1 of that form that allows you to check the box. So I would go along with that yes, you can go back. Of course, you'd be subjected to any underpayment penalties or late payment penalties if you do make that election. Is the entity or the owner penalized for not making PTE estimates? So again, this is part of understanding pass-through entity. If the entity elects pass-through entity, then it's the entity is the one who pays the underpayment of estimated tax penalty. Has nothing to do with the individual. However, bear in mind, if the entity does not elect PTE, and you flow through the income from that entity to the individual, and the individual individually then owes Illinois tax, if they have not made estimates, then they could be subjected to penalties for underpayment of tax on that issue. But when it actually comes to the PTE, that is on the entity to make those. This attendee said, I paid 2021 PTE, but didn't understand that I needed to make estimates. My total PTE is less than $500. Will I be penalized if I elect PTE in 2022 here in 2023 when you're doing the 2022 return? That is one of the exceptions to the penalty, that if the balance due is less than $500, you are not subject to any penalty. Will penalties be assessed for late or underpayment of PTE? Since there was confusion with the due date of the fourth estimate, because when they first came out with this, they put in their instructions, and even my tax program put down that fourth quarter estimate wasn't due until January 17th of 23. Later in the filing season, Illinois clarified that and said, oh no, it's due on the 4th month, the 6th month, the 9th month, and the 12th month. So that has been clarified. That fourth quarter is due in December. As far as will they abate that penalty for 2022 here, I do not know. We'll have to wait and see what Illinois Department of Revenue comes up with for that. Another one with PTE said, isn't Illinois similar to Indiana in that pass-through entity paid in other states, for example, Wisconsin, do not count as taxes paid by the individual and therefore are not allowed on the ILCR as taxes paid by the individual? And that answer is no. As far as I know, Indiana is the only state near us that takes that position. Illinois has explicitly stated that they will allow a credit to a resident partner and S-Corp shareholders for substantially similar PTE taxes imposed by other states. So I know Missouri, by the way, if you're on the western part of Illinois, Missouri also has adopted this same definition. In 2021, Missouri was on the fence about whether they were going to allow it as tax paid by the individual or not. I don't know what they finally came up with on that, but Indiana for sure does not. And for Illinois, we absolutely do allow that. The next question comes up with, can an Illinois resident claim the Illinois credit for the tax paid to other states for PTE tax paid outside of Illinois? I answered that question. How do you handle PTE with an Illinois S-Corp that has income in both Illinois and Indiana, and one shareholder is Illinois resident and one shareholder is an Indiana resident? The entity makes the election to pay PTE, okay? So it's not a choice. If the entity makes it, then you pay Illinois PTE on the Illinois-based income. You certainly wouldn't pay it on the Indiana-based income. However, when you turn it around and look at it from the shareholder viewpoint, then it probably wouldn't be a great idea from the Indiana shareholder's viewpoint, because that Indiana shareholder is going to pay Illinois income tax via the PTE on the Illinois portion, but when he goes to file his Indiana tax return, he's not going to get credit for that, and Indiana is going to tax him again on that Illinois-based income. So because the entity has to make the election, I think this is going to be a tough one to call when you have Illinois and Indiana residents involved in an entity, because you cannot choose shareholder by shareholder or partner by partner. It is an all or nothing. Regarding Indiana PTE, what about an Illinois resident who receives an Indiana K-1 with PTE? Does Illinois allow, and does Indiana also allow? And this is a moot question because Indiana does not have PTE. Therefore, this question would never come into play. This is a rather involved one, and so I'm glad I have it on an overhead that you can go back and read later. The question was, an S Corp has an investment in an upper tier partnership that passes through pass-through entity credit to the S Corp via the K1P. The S Corp also has other income. Can the S Corp then take that credit coming through from the PTE to offset their total tax of 6.45% owed, or do they need to temporarily double pay that, waiting for that upper tier partnership pass-through entity to flow on through to the shareholders? And I found an answer for that. That question had not occurred to me. And they did an example where when I was doing my research, and the answer is yes, you can use that pass-through, flow-through entity into the S Corp from that upper tier partnership, use that credit to pay the tax that's due on the S Corp. So that is came right out of some research material. Whoever asked that question, if you need something else, you might reach out to me and send me an email if you would like. Pass-through entity. Is the pass-through entity tax applicable to single-member LLCs? And I'm assuming that this question was based on single-member LLCs treated as a disregarded entity. And the answer to that is no, because it's only applicable for entities that file 1065 or 1120F. However, I just wanted to point out if that single member LLC wanted to pay tax as an S Corp, now the pass-through entity tax would apply and they would get their state income tax as a deduction. What line on the IL return do you report payments made for PTE? Again, I wasn't sure if you were asking on the individual side receiving it or on the side where it's computed. So I gave you both answers. On the Form 1040, when you have pass-through entity payments, they're reported on line 28 in the payment section of the IL 1040. If you were asking on Form 1065, where you compute the PTE that will be passed out, that computation is done on line 61, and then any estimates that the entity may have paid during that year are entered on line 65B. Partnerships that have partners that live in different states and Illinois partners want to elect PTE, is there a form that partners need to sign to consent to the PTE? And this references what I said earlier. In Illinois, it is an all or none election. So the partners have to agree at the entity level, yes, we're going to elect PTE, or no, we're not. It is not a partner or a shareholder by shareholder election. Now, that is true in some states. I believe someone told me California has it as a shareholder or partner election, but not here in Illinois. Can you elect the PTE if you deduct your personal service income? Example, we are a law firm. So here's right out of the instructions on how pass-through entity net income has the same meaning as defined under Section 202 of the Illinois Income Tax Act, except that the three following items are not used to reduce taxable income. Number one, you don't take the standard allowance as or exemption as a deduction. The deduction for net losses allowed under Section 207 are not taken. And look at that third one, that modification we make for personal service or reasonable allowance for compensation paid to partners, you do not deduct that before you arrive at what income, which is a benefit to the taxpayers because now they can do pass-through entity tax based upon that income before you make the election for reasonable allowance for compensation. We have a few questions about the rebates. It says, are the Illinois tax rebates that individuals received this past fall considered taxable on the federal return? I've not seen any final determination on that. My educated guess is no, they're not going to be, but we'll have to wait for further guidance to know for sure. So this asks then, because the first question here that was about the rebates, the $50 per person, $100 per dependent. But this one is Illinois property tax rebate taxable income, or does it need to be added back to Schedule A or to Schedule ICR? So this is the property tax portion where we got 5% of our property tax back. So let's think that through for a moment. The rebate was based upon property tax that you paid during 2021, presumably for 2020 property tax, since we pay our taxes in arrears here in Illinois. If you itemized on your federal return, you would have to call it federal taxable income if you received a benefit from that deduction. Of course, if you had $10,000 of tax deduction on your Schedule A without using all of your property tax, then you would have received no benefit from that. You would not have to call it taxable. The second half of that question is, when we go to do the ICR schedule on Illinois this year, are we going to have to take our property tax and reduce it by that 5% that we received back in September or October? Again, I'm using tax logic here, but I don't believe you're going to, and the reason is we've historically already received 5% of property tax in prior years when we filed the tax return. And in the following year, we never reduced that current year's property tax by the amount of that rebate we got the prior year on our Illinois 1040. So I'm going to go out on a limb and make the same assumption here that that additional 5% property tax credit we got back is not going to have to be used as taxable income on Illinois, nor do I see it being used to reduce the current year's Illinois property tax that you can take the 5% credit on for 2022. The next section has to do with the secure choice. It says, does it pertain to full-time only? And it does not state. Here is the exact verbiage. You're required to facilitate Illinois secure choice if you reported W-2 wages for 5 or more employees during all 4 quarters of the previous calendar year. So in other words, on your IL-941, your Illinois unemployment, if you reported wages for 5 or more employees, apparently it doesn't matter how small, you will be required to facilitate Illinois secure choice. This question was interesting. It says, if an employer has 20 employees covered under a union pension plan, but has 2 other employees that are not covered, maybe they're office workers or someone along that line, do they need to enroll in secure choice for the 2 non-covered employees? And this is interesting. The answer is no. If you offer an employer-sponsored retirement plan to any of your employees, you do not need to facilitate the secure choice. Now, you always have the choice. You can if you so desire, but you don't have to. You're not required. Again, we had a question, how are the 5 employees determined? Again, same answer as the question prior. They look at your Illinois unemployment, and if you have 5 or more employees, then you're going to have to register. And again, the employees can always go in and opt out. And it said, is a shareholder included in the secure choice employee count? And the answer is yes. Anyone who receives a W-2. And then this one, again, points out, can you request to participate in secure choice if you only have 3 employees? The answer is yes. You can always choose to participate. It's whether you're required to participate is the issue. And then, does Illinois Secure Choice apply to nonprofits? The answer is yes on that as well. And someone said, do you have a sample letter for opting out or explaining secure choice to employees? I put the website up here so that you can cut and paste or copy this over. It has a communication document that you can download and use to give to your employees. I put it on the screen here to give you a little bit of an idea of what that looks like. And you can just insert your company name wherever it says company name and make it your own. And it tells the employee what Illinois Secure Choice is and how they can facilitate it. And again, this is the website here that you go to that you can download that document and use it if you so desire. If the employer is in the Illinois Secure Choice, should the retirement plan box be checked on W-2s? And this is a great question. This had not occurred to me, but Illinois Secure Choice acts as a payroll deduction IRA. So it is not a company-sponsored retirement plan as defined for W-2 purposes. So you're going to not see anything of it marked on the W-2, nor will you check the box that says you're in an employer-sponsored plan. Does it matter how old the employees are for each employer to be required to enroll in Secure Choice? Example, Pizza Place has over 5 employees, but all of them are under age 18. So I put for the answer here, the eligibility is they must be 18 or older. They must be employed in the state of Illinois, full-time, part-time, or a business owner who is considered an employee. Those are the people that you count as far as determining the 5. What if an Illinois employer has out-of-state employees? They must still cover them. So it doesn't matter where the employee lives, it's because you're an Illinois-based employer. However, always remember the employee, all they have to do is log in and opt out, and then it's over and done with. Can an employer who has a retirement program already sign up its employees for Illinois Secure Choice? Absolutely. They would love to have your money. How does this Secure Choice interact with the traditional or Roth annual limits? Any money sent through the Secure Choice acts as a Roth contribution, and they will be counted towards the annual limit. We have to rely on employees to tell us how much to deduct for Roth, and the answer is yes. However, bear in mind the minimum is 5%. If they do not elect a different percentage or amount, but they have to do a minimum of 5%. If you are an employer with a retirement plan, do you need to register anything with the state? And the answer is no. If you have a retirement plan, you do not need to register, and here are the requirements. Fewer than 5 employees, or you've been in business less than 2 years, or you already have an employer-sponsored plan, no need to register. Are the Amish employers subject to Illinois Secure Choice? I am not sure. I tried to find an answer for that, and I could not find a definitive answer. However, I gave you a website here, and there is an exemption form that can be filled out if you go to this website, and you might try filing for an exemption saying, again, that under the Amish rules, you are against any type of state-run program like this, and see if it would go. But I do not know that answer. Can religious organizations opt out? And again, same answer as to the Amish. Same site, go there and see if you can get an exemption to it. I have not seen anything. I know nonprofits are subject to it, so I'm going to guess religious organizations are going to be required to participate as well. Is the employer required to contribute anything to the Illinois Secure Choice? And the answer is no. It is 100% employee contributions. Remember, it goes into a Roth, so there's no tax deductions currently or anything else. Since Illinois Secure is not reported on the W-2, if preparer is unaware of these contributions, how is Form 8606 completed for Roth contributions? I am not aware that you need to do an 8606 for Roth contribution, so I don't know that that's a valid question, but that's my interpretation. Over contributions, if you're concerned that they put, $1,000 in through their employer, Illinois Secure Choice, and then went and put $7,000 into a Roth on their own somewhere, the over contribution is going to be caught via Form 5498, which is the form the trustees send into IRS each year showing contributions made by each individual. The question was, can the employer go in and opt out for the employee? And the answer is no. The employee must log in and opt out. We have a few questions here to finish up that has to do with other topics I talked about. One of them was the gambling credit, where we didn't used to be able to take the credit paid to other states. Now we can. And it said, for the gambling credit, do you have to file a tax return in the state that the gambling was won in? Or does the W-2G qualify you for the credit? You have to actually file the tax return in that state, because one of the required attachments to the Illinois CR is a copy of the other state's return showing the liability that was created for that gambling or that income. The Illinois Educator credit, this is a correction to my presentation the other day. This attendee said, I thought the Illinois Department of Revenue release on 8/17/22 raised the instructional material credit from $250 to $500 beginning in 2023, and this attendee is 100% correct. It's $250 for years beginning prior to 1/1/23, but it increases to $500 starting in 2023, and I had mistakenly said $300 in the presentation the other day. Thank you for clarifying that. The Educator credit, where do I deduct the Educator credit on the Illinois return? It goes in the most bizarre places. It goes on line 10 of Form 1299C. So you have to do the 1299C to get that credit. These couple of questions had to do with bonus depreciation. In 2023, bonus depreciation becomes 80%, not 100. Will Illinois still be decoupled from bonus? Well, as I explained the other day, the reason we didn't have the decoupling for the first 3 years of 100% bonus is because back in 07-08, when we first got bonus depreciation of 30 and 50%, Illinois had written their law and used the terminology of 30 and 50%. Well, now when they wrote this new bill, they used the term bonus depreciation. They didn't just limit it to 30, 50, and 100. It said all bonus. So I believe that we will still be decoupled from bonus in 2023 when it's 80%. This is the property tax rebate. It says, will Illinois allow the filing of Form ILPTR for 2021 with the 2022 tax return? And the answer is no. That program closed back on October 17th. It's done, it's dead. The only thing you might have now is you might have a client who hasn't received it yet. Now you may be able to reach out to Illinois Department of Revenue and see where that credit is. But as far as filing for it, you've passed the deadline. The checkbox for the health insurance benefits, it said, is there a dollar amount of income for single or married filing joint that would qualify Illinois residents for health insurance benefits? And I'm sorry, I do not know anything about health insurance benefits, what programs there are out there. So I don't have an answer for you on that, but I was thinking the same thing, if that helps any. The net operating loss, someone said, is $100,000 limited in Illinois? Is that the most you can have? That $100,000 limit is for C corporations only, not for individuals. So the 100,000 is C corps only. The education credit for the 25% credit that you have for children, that is only for kindergarten through 12th grade. So preschool is not eligible. Someone wanted to know, how do you get prior year copies of W-2s that have state information on it? Because as you all know, the federal transcripts only give you federal info. The only way I've ever been successful is going back to the employer and trying to get a W-2. Sometimes I've had taxpayers who have a paycheck stub, and I will do one of those W-2s with my tax program and attach a copy of the paycheck stub as a PDF. But other than that, I really don't know. I don't know if Illinois offers a program of getting that. There for a while, we didn't have to file W-2s to Illinois. Now we're back where we file W-2s to Illinois. So I'm not sure if there is a program like that or not. Power of attorney, can I file a POA with the Illinois tax return? And not that I am aware of. I've never tried it, but when I read the instructions, these are the 4 ways that you can submit a power of attorney form, and it's all other than with the tax return. It's done with MyTax, done by email, done by fax, or by snail mail, not with the tax return. That ends my presentation with questions. You can reach out to the state of Illinois if you would like, and they will share my email address with you if you would like to send me a direct email. Other than that, I hope you all have a successful tax filing season, and we'll see you next fall.